Hello everybody. It's been a month since we last looked at my wealth. It was also the 11th when I did it previously, so let's have a look and see how we're doing as of March 2021. Okay, so first of all, we'll start with total wealth. March, I guess, is a little bit disappointing just because we didn't hit the projection. There are two main reasons for this. The first is actually my wife's side hustle or business that she's got started. We agreed that she could have up to 10,000 to spend on it. So far, she's used, I think, about 2.5. But saying that, she has got her first customer, so she started contributing back as well. But overall, that did definitely have an impact. And also, as well, our private pensions really didn't perform as well as I would have liked. Actually, underperformed me in terms of the shares. We'll get to that a little bit though. But what that really means is, as a combination of those things, actually, we're £900 behind where I was expecting to be. We are still on track to hit our 250 by May, which is a number I'm really looking forward to for purely psychological reasons, being $250,000. But that's where we currently are at the moment. So let's have a little walk through the breakdown and go into the details. Okay, so this is a very high level, as I discussed last month, and I think it's probably fairly common for early to mid 30s. If you're lucky enough to have a home, that's where most of your asset worth is going to be. Our contribution, as we'll touch on, is nearing 30%, not quite there yet, but a huge amount of our wealth is tied up in our home. There's also some pension pots, as I've touched on, some ISAs, some non-ISAs, both shares only, and then an other pot here, which is kind of bank accounts, etc., etc. There is a bit of a breakdown here in terms of the other, just to lay that out, but that's roughly how it looks. So this is at a high level, and now we're going to go into the details. Okay, so our home equity currently stands at 29.5%. I'm really looking forward to when it gets to about 30%. I still think that's about 3 months away. It was 29.33 last month, so it's making progress. On the good side as well, I've calculated a reasonable increase in our home value each month. This is based on my in the area that we live, current house price rises. I haven't had it independently valued. It is something I would like to do, but this is kind of off the expected trends for where we live in London, as well as a recent sale on a property website. So I think it's reasonably accurate, but we shall see. Anyway, we continue to pay a monthly mortgage. We have a okay mortgage. I don't think it's fantastic, but it's also not terrible. A majority of our payment does go toward the capital contribution rather than interest, but it adds up. So I'm pretty pleased with how we're moving on. I mean, we could potentially bring forward our mortgage payment, but it doesn't really make sense to me to do so. The rate is low enough that it's there are better uses of our money as it stands currently. So we'll see. But yeah, 29.5%, progressing as I'd expect. Okay, and this is probably the most disappointing slide, honestly. So we have 3 pensions, basically. 2 of them with me, and 1 of them is my wife. First one is Nutmeg. This is a consolidated pension from 2 previous employers that I had before my current one. So we aren't adding anything extra to it, and it rose 200 and a bit pounds. So it's an okay performance. So I'm not too sad about that. I think the one I'm most disappointed in is my current pension, which is Standard Life. Now I contribute about £260, but because of a government incentive and my employer basically matching up to 5%, I end up paying about £700 into my private pension each month, but despite that payment going in, it only actually went up less than £100, so a bit of an underperformance, to put it mildly. Wasn't really expecting that. It'd been going quite well, but definitely underperformed over the last month. My wife's pension also went backwards, but her company at the moment is in the process of changing pension providers. Actually didn't contribute anything, and her pension didn't go in on this month, so that's a little bit annoying, especially because she had a bit of a backdated catch up coming back from maternity. Hers also went backwards, not helped because there was no additional contribution, which again I wasn't really expecting. So pensions definitely not performing behind where I expected them to be. There was a small increase of a couple of £100 across all of them, but honestly I'm pretty disappointed in this particular part. But what can you do? Okay, now moving on to shares. This has performed quite well. We have been adding capital as well. We're currently doing £800 a week, and there's been, I believe, 5 weeks since then. So, 800 times 5 is going to be 4,000. So certainly a reasonable amount of this increase is because of that additional contribution. But our shares at the moment, our overall portfolio is about 2,000 in the profit. So definitely also going really well. So this is actually going slightly better than I was expecting. Current run rate, I've been investing for about 4 months now, and I'm up about 6%. So I'd love to be able to finish the year up 18%. It is a fairly friendly market at the moment. And I've also been making lots of changes as well. I sort of made some mistakes when I first started investing in shares. My portfolio today is looking increasingly good, and I do a monthly walk through my stock portfolio as well as a weekly. This is what I've been buying for anybody interested in those details. But so far, I'm super happy with how it's going. I did also discuss my portfolio with a few work colleagues and friends, and also my brother-in-law is an expert. So I've also he's kindly agreed to review my portfolio as well, and we were comparing it to a fund, sort of looking at my segmentation, etc. as well, which has been quite useful to get his feedback. And he's going to do a version 2 of that feedback next week. So yeah, really helpful to him for helping me out on that and progressing. But yeah, this, I think, if my pension's disappointed, my shares have actually been overperforming. So I'm really pleased with this slide. Okay, and now we move on to other. Now this is a bank account. You can see there are bank accounts taking quite a big drop. Part of that is, as I discussed earlier, some seed money, I guess, to my wife's side hustle. She's doing a coaching business, a productivity coaching, which is fairly similar to what she does for a day job for a company, but it's kind of working with people to help them. So that definitely contributed. That said, at the moment, she has got her first customer. I won't discuss what's been agreed because I think it's fairly confidential, so I won't go into the details there. But first customer paying money, and that sits within her bank account. You can see there as well that my wife's bank account ever is currently at nearly 6,000. That's like I say, 2 months worth of wages almost, as well as the income from the first customer. And she's been spending as well, so her admin is just a little bit behind at the moment. But it does all get bundled together eventually. And then the rest is relatively unchanged or modest. We have a couple of IOUs, one in our favor, one not, that we are managing, and really what I'm trying to do here is this 5,500 that we're basically behind. I want that to be less than what's in our non-ISA investments, so that if we had a call on this money, then we would have sufficient cash to cover it. So at the moment, we've got 39,000 in slightly more than that, about 40,000 in cash, and then we've got about 6,000 in non-ISA as well. So we're kind of a little bit fine at the moment. The plan is basically that from about April, my wife is now back working full-time again, and we'll start sort of building up a bit more of a cushion. But it was quite important that we maxed out our ISA shares before the end of the financial year, just to really maximize those. So I'll take my foot off the gas a little bit maybe in early April, but for now, reasonably happy, even though we don't have much in the way of fat, but it's progressing. So yeah, this is our other, basically cash, nursery deposit. I just put that in there because it's eventually will come back to us, but not in any time soon. And that's where we currently stand in terms of other. All right, so wrapping up, a couple of bits where I expect them to be, mainly on the mortgage payment. Really disappointed with my private pensions performance. By mine, I mean my wife's and myself, as well as my wife's employer. Having sloppy admin and not actually getting their pension sorted in time for the payroll. We also have a query with them as well, because we're not convinced that my wife's been properly paid her pension while she's been on maternity leave, but we'll wait and see what happens with that. But yeah, that's disappointing. Shares are going super well, really happy with that. And yeah, we are definitely running a little bit close to the bone in terms of making sure we have enough just in case we do get requested to repay the IOU, which is gradually accumulating. And that's the focus at the moment. But currently we have about £1,000 spare, which I'm happy with. And yeah, the big news, the big change this month really, and the reason why we didn't hit our numbers was to be honest, I mean, I say the pension was disappointing. It's kind of offset by a great shares performance. Really, the reason why we didn't hit the number was because of the seed money that my wife and I agreed for her side hustle. And that's a couple of thousand. But then we did have some money coming back from her first customer. So the sort of balance there is the main contributor toward this, as well as the underperformance in the private shares. For me, I have a bunch of long-term aims, which I've done a video for. I will be updating it because I realize that all my aims are financial, and there are some other things that I'd also like to be aiming for. But the immediate one is actually hitting our 250,000 by May. I believe that we're still on target for it, even if we might hit 252 or 251 instead of 253. But that's the month I'm really looking forward to. So that's where we are. Definitely running behind at the moment, with some good mitigations. And we'll just have to improve from here, really. So that's where we currently stand. Thank you very much, everyone, for watching, and I'll see you on this presentation, this video, in another month. Cheers. Bye.